Hello, and welcome to the Jorns & Associates overview for our Employee Retention Tax Credit Program. The ERC program was first introduced in the CARES Act back in March of 2020, and it created up to $26,000 in tax credits per W-2 employee that a business had during the pandemic, basically March of 20 through December of 21. It's a fully refundable tax credit against the employer portion of Social Security and Medicare, paid directly via a check. It's not a loan. It's not earmarked. And you claim this credit by filing an amended 941X quarterly payroll tax return, and you take the ERC credit on lines 18 and 26. There's several misconceptions about the Employee Retention Tax Credit Program. A lot of businesses don't believe they qualify because maybe they didn't have a decline in revenue. Maybe they did even better during COVID. They didn't completely shut down, or because they received Paycheck Protection Program loans. And while these are all factors in the process, they do not disqualify you from receiving the ERC funding. The qualification process is extremely thorough. We look at areas of a business client that may have been affected by governmental orders that limited commerce, limited travel, limited large group gatherings or group meetings, affected the supply chain. We cross every T and dot every I when we're generating these qualification reports for our clients. The scope of engagement is pretty simple. You provide us with the contact information for your CPA, bookkeeper, your internal accounting team. We'll coordinate with them to gather all the documents that we'll need. You'll complete a basic client questionnaire to help our qualifications team figure out where you may qualify for this Employee Retention Tax Credit Program. You'll provide us with your payroll reports, PPP loan forgiveness application. We'll calculate all the wages and make sure we don't double dip between PPP loan wages and the ERC wages. You provide us with your original 941 returns, and then we'll prepare the 941X amended returns and help get those filed with the IRS. We do not guarantee any specific refund amount until we have received all the payroll data and we receive an approved qualification report from our client. We do guarantee that our calculations are accurate. We do guarantee that the 941X filings with the IRS are compliant with program rules and regulations, and we do provide long-term audit assistance in the case of an audit. With the fee structure, there's no financial risk of working with Jorns & Associates. We charge a contingency fee of 20% of the amount of credits delivered. That's not due until you receive your checks from the United States Treasury. We do charge a fully refundable deposit of $2,600 due when you sign the engagement agreement. There's no scenario where Jorns & Associates keeps that $2,600. If for any reason we don't move forward with the filing, maybe our team doesn't feel like you'd qualify, we immediately refund the $2,600. If you just feel like, hey, we don't want to move forward with this, we refund the $2,600. And if you do qualify, when you receive your checks from the Treasury for however many quarters you filed and qualified for, we'll credit that $2,600 deposit on the amount due for that contingency fee. We have software performing the calculations to help eliminate human error, and we have an audit-ready package that includes our compliance services. If a client wants to move forward, it's pretty simple. You just sign the engagement letter, remit the fully refundable deposit. You'll provide our team with your completed questionnaire, all the required documents. We have a revenue spreadsheet, the 941 payroll tax returns, payroll documents, your PPP loan details. You'll have an onboarding specialist that's assigned to your file to help guide you through this process. And we have a repository that's secure where you can download all your documents directly into that Jorns & Associates repository. We'll prepare all the filing documents once we receive everything from our client, and then we'll let the client review the revised 941 documents and all the work papers, sign off on that, and then a CPA will be the final signature before it's mailed to the IRS for filing. For most clients, in approximately 14 to 20 weeks, the checks will start coming in from the IRS. A larger client that's getting more than a couple $100,000 in a particular quarter, those quarters can take about double that time to start seeing those checks. Once the checks come in, we'll invoice you for the remaining balance due after you receive your payment from the Treasury. There's plenty of information where you can do your own due diligence and your research. You can go to the irs.gov website and learn more about the Employee Retention Tax Credit Program. The bottom line is this program was created to help businesses that kept employees on during the pandemic. Our goal at Jorns & Associates is to help you determine if you qualify for this program, how much you qualify for, and if you do, and you don't claim this funding, the government will find something else to do with that money. Our goal at Jorns is to help you get this funding if you qualify for it and move it from the Treasury's account into your business bank account where it truly belongs.